Hey, good morning, everyone. Welcome to Ankerstar Wealth, a morning show. We're back with you. Mike and I were both in New York City last week. Mike came back with a full bill of health. I did not, hence the cough and miserable look I have on my face. So I'm still kind of surviving whatever it is I brought back from there. So short show on my behalf today. I'll talk real quick about the conference I went to up in New York. Then I'll hand it over to Mike, who's going to talk about the retail sales number that came out this morning, as well as that when it comes Social Security time, you can choose when to draw on your Social Security, and your decision also affects others as well if you're married, that sort of thing. So anyhow, Mike's going to show you some numbers associated with that, which is always good to kind of keep that in the back of your mind. That's a one-time in a life decision that you make there. Before we begin, though, it's a financial education presentation, so you have to do your own due diligence for acting upon anything you hear in this presentation. More disclaimer information is available at ankerstarwealth.com. The opinions expressed are Mike and mine alone. I'll share out real quick what our keynote speakers for the conference I went to. It was a global private investors conference. So here are the three keynote speakers. So these are names that you probably have heard of. Maybe not everybody's heard of them, but Scaramucci for sure, Cameron Dawson and Tim Draper. They were their heavy hitters. This was the first time I'd gone to. It was an invite only sort of thing, so I was very lucky to get in. I also was on one of the panels there, and I did start off with, I think I'm the most junior person in the room by assets under management, but I'll more than make up with that with strong opinions. Got a few chuckles from the crew. I didn't meet anybody that managed millions there. Everybody else was billions and above. So really a high quality, high caliber group to be in, and mostly listen and learn. And then of course I offered my own 2 cents during one of the panels. But it was what I found interesting was the first time when you walked in, they actually said no recording of any kind during this presentation, any of the presentations today. So because they want everybody to speak freely, because often, Mike and I speak freely all the time, probably too often, some of you may say, but these folks, obviously people are always listening and can turn around and take what they say and out of context and things. So it really was a true open forum for sharing information. So I felt like you got a little more of the truth of what people are thinking, not necessarily what they're, having to say or what their bosses say. They're trying to walk the fine line or anything. So overall, I thought it was a great experience. I learned a ton. I will say that the 2 areas that the entire market's moving to, since the public markets have run up so much, people are diversifying a lot more into private equity and commercial real estate. Private equity is just a diversifier with a little bit higher returns. Obviously, you're going to lose some liquidity there if you go off into private equity. We use Blackstone. If you're interested, reach out to your advisor. Commercial real estate, you're also going to tie your money up. You're going to get the higher returns. And of course, we have a couple of options here locally in the what I call the I-35 corridor up and down Texas, which is just booming. So that was the conference that I went to. I'm going to hand you over to Mike, and he can talk to us about some retail numbers.
All right. Well, Steve, I hope you feel better. I also had a good time in New York. I'll cover my conference another day, but I want to hit the retail numbers. It's the standard, is bad news, good news kind of thing. Retail spending was slightly weaker than expected, 0.1%. That's not a big drop. It is kind of that standard, bad news is good news. This kind of thing, weakening is a better chance that rates will be cut by the Fed later this year. So it's kind of along those lines. Kind of highlight one thing I want to say is even though it was 0.1% lower than expected, it's still up 2.3% overall from last year. So to me, that seems pretty normal. I mean, that's kind of expected. One thing is they did say it would actually have went down 0.1%, except for autos sales were up. So that's kind of good news too, especially because I have a wife who works for Ford. So, and then one other part I wanted to let you know is, gas prices have went down a little bit. Hopefully you're noticing that. And then they said a 2.8% increase at sporting goods, which there's not that many stores of those left, and music and bookstores. And I was like, what is there, like, one bookstore left? I don't even know. I mean, most books are purchased on Amazon, and most of the bookstores I know of have disappeared. So not much news there really, but here's the other thing, is Social Security. I'll just bring this up while I talk about it. As we get closer to that Social Security age, and we've seen this come out of our paycheck for 30 years, 20 years, whatever length of time. If you've seen you're paying Social Security, or if you're a business owner, you might be paying both sides of it, like over 12%. But even if you're just a W-2 employee, you're paying 6%. And part of me, and when I think about Social Security, and I hear in the future, it may run out, but it's not really going to run out. It's just they're not going to overfund it anymore. Thing is, it's like, I want to get something back. Like, I put something in, I put it in, and someday I want to get something back. And I could understand it. The closer I get to it, the more I kind of want, like, I want to get a piece of this, because you just think about that. So one thing before I get to my showing some numbers, I want to say you can go out to ssa.gov, and this is what the website looks like, and get your Social Security statement. They used to mail these to you. You're probably not like me and you have a folder of the last 20 years of them, but for some reason I do, just because I like seeing the number go up, because I keep paying in, so it keeps going up. But you can go out and get this, and you'll know exactly, based on your earnings so far as of last year, what Social Security you are due to get at a 62, 67, or 70-year-old basis. And the way it works is 67 for any of you that have born after 1960. 67 is the full retirement age. So everything kind of works from there. If you take it early, you get 6% less per year. If you take it later, you get 8% more. So that brings you to the slide that I'm showing here, which is that key decision. Do I take it 60? I mean, you can take it at 63 or 64, but for the most part, think of it as a 62, 67, or 70-year-old choice. And you can see some numbers here. And, those of us that I want to get the best deal, you kind of look at these break-even periods. So the break-even periods are those gray bars. So if you're trying to decide whether you want to take it at age 67 or 70, you're looking at a break-even period of like 81 years old. If you live to 81, that's your break-even. After that, you're getting the better deal taking it later. And when you think about that part of it, the mortality factor, it's a bit depressing. So I do want to say one thing is that if you take Social Security before your full retirement age and you make more than $22,000 a year, then they reduce the amount of Social Security you get paid. So that should come into that factor as well. But if you look at the bottom part where you see 100, 100, 100. So that means if you're age 62, you made it to age 62. But going on from there, going on from there, and guys are on the top, and then females in the middle, and then both of you at the bottom. The probability of living to certain age specs. So Steve, we're not quite to 62, but we're getting there. So if you make it to 62 and you're a male, you have a 67% chance of making it to 77 and an 18% chance of making it to 90. So, FYI, if you're female, hey, the news is better. You got a 29% chance of making it to 90. And then interesting enough, between you and your spouse, one of you has, between you, one of you will make it to at least 90, 42% of the time. So this is all comes into, when do I take Social Security? So I would say that as you consider this and you talk to your financial advisor at Ankerstar Wealth, and because you definitely want to talk through this, you do have a key decision to make. Although I will let you know that if you make that decision, like you take it at 62 and you change your mind in the first 12 months, there's a way to pay it back and change your mind. But after that, it's pretty much locked in. So I just wanted to bring this up, and you can see that, it's incredible. If you live to 90 and you waited to take it at age 70 and your benefit was $4,748 per month, it's like a $1.8 million decision. So that's pretty cool. And I will say there is another factor, is if you take the money and you invest it, hopefully with Ankerstar, well, it also impacts that decision. So big decision. I know everybody wants to get their piece of Social Security. It'd be really unfortunate. Like if I claimed it at 70, Steve, and I only made it to like 71 years old, I'd be like, I really didn't get a good deal on that, but I won't even know. Back to you.
No, it's the same thing. Two things I talk about when I talk about this with clients. I'm like, first of all, when do you think you're going to die? Most people just don't know. But I say that to try to break the ice a little bit with the, unless you have just look at your family history, right? If your family history is not many people are making it past the early 70s, then yeah, claim at 62, right? There's enough evidence right there. Or if everybody lives, super long time, then don't claim early because there's evidence there, right? And then secondly is if you need cash flow starting at age 62, like that's when you retire. Whenever you step away from retiring and you want to immediately have cash flow to help it replace that income, that's a good time. What I always find interesting is the government doesn't care. There's no like best benefit for the government here. It's like they're truly letting you decide on how you play all of this because it's really agnostic, because really the government doesn't know when you're going to die either. So they let you make your own decision there. So, all right, good stuff. Thanks for bearing with my voice that is probably about to give out for the day. And with that, we will see you guys back tomorrow. You have a good one. Bye.